like to hear your overview of the market, especially yesterday. All eyes were on the Nvidia, and then was it something you expected? I mean, the second quarter earnings hit the estimates, but then we seen probably related to the third quarter, the guideline was not meet the expectation. So is that why we see some kind of drop in the price, or what's your overview on that?
Yeah, they have a new chip that they're struggling a little bit to get produced, and that's really what did it. Plus, they beat expectations, but it's very much like the Olympics. When you see somebody who has just been blowing away the competition, and then that particular person wins, but only wins by a little bit, you're a little disappointed. You know, they win, but they don't get a world record, right? That's what happened with NVIDIA yesterday. They beat on every primary metric: revenue, sales, net sales, EPS, everything. 64 cents expected. They came in, I believe, at 68. But the stock dropped as much as, well, it's down about about $5 right now. Like, yeah, it's down about 547 or so. They're moving quickly. But on their conference call, they talked about some of the problems that they were having with this particular new chip, but they fully expect it to be settled before the next quarter, and they should have no problem after that. And also, you know, the CEO talked very highly about the quarter that they just had, but it wasn't enough. Now, the interesting thing today is that the NASDAQ and the S&P, the two biggest market-weighted indexes, are still rallying, with the largest stock by market cap negative. So that shows you that the breadth of the market is very strong, and we're fighting in what's normally approaching a very weak month. September and October are historically very weak months for equities when you're talking about seasonality. So it's a good sign for overall markets for NVIDIA to be down. And the last thing I'll say about this, I should finish that sentence, for NVIDIA to be down, but the markets to still be up. To finish my thought, after NVIDIA's earnings, every single major investment bank said buy the dip. They all said buy the dip. Now, I don't know if that's just because their private trading desks are very long NVIDIA. I don't know. Supposedly they don't do that anymore, but they used to do that. So we'll have to see how that plays out. But the market was definitely disappointed in NVIDIA, and it's probably an opportunity for people to get in at a slightly better price. Not even down that much anymore.
Well, that was kind of surprising. The point you mentioned lastly, it was a belief that NVIDIA was driving the markets. And then now what we are seeing is actually, it's not that, right?
Yeah. I mean, again, it's up versus it's open, but it's only down 2.8%. In the overnight, it was down more than 5%. Okay. So it seems to me like people are listening to the analysts. They're thinking about this as an opportunity to buy the dip. Now, for me, it has a sort of a rolling over characteristic on its chart, right? When you look at an NVIDIA chart, it's kind of rolling over a bit, but it's rolling over above very significant support. So the support can hold, and it can roll right back up higher.
I don't know if you have checked the daily chart of the NVIDIA. That the recent pattern seems to be cup and handle. I'm not sure if you agree with me or.
No, I agree. It's a very clear cup and handle, unless it continues lower, in which case it's breaking the cup, right? I don't see this as a large reversal, although if you look, for example, on a weekly chart, you have a very significant double top on a weekly chart, which could almost be a head and shoulders, except that we have a long way to go to form the right hand shoulder. So I'm not going to show you that. I'm not going to show you that one today, even though that's what we're talking about. And the reason I'm not is because it's not fully formed, and I don't want people. I worry about you guys, and I worry about you guys like jumping the gun and getting in trades that are not fully formed yet. So when I show you head and shoulders, say, I'm going to show you one that already happened.
Please. I would like to say good morning, Ben. As always, our regular is there.
Yeah.
Janine. Janine, good morning. And I would like to remind everyone in the room, please do ask questions to Bob Iaccino. He's always willing to answer questions in the topic or out of the topic.
I'd also like all of you guys to tell me where you're watching from. I always like to know that.
Yeah, that will be also interesting.
As we get into the subject, can you all put where you're watching from? I'd like to know that.
We are excited to see where our followers from. So, Bob, today we'll talk. I'll ask you some questions about the head and shoulders pattern, but we can kick off things with the basics. What is the head and shoulders pattern and how it's identified on the price chart?
So
we're getting some answers there. Okay.
Head and shoulders are very similar to what I look like right now, right? You have a shoulder, a head, and a shoulder. That's a rounding, and higher rounding, and then another rounding, right? Head and shoulders, the thing to remember is that there's head and shoulders and there's inverse head and shoulders, or what some people call head and shoulders bottoms, right? They are always reversal patterns, similar to double tops and double bottoms. And they often look like double tops and double bottoms. It's just there's one more rotation. But there's some very specific things, just like I did with double tops and double bottoms. Myself and my partner, Mike Arnold, who, if you ever want to watch Mike's technical analysis, you can go to the Path Trading Partners YouTube channel. It's all free. You don't have to pay for anything. Just go to Path Trading Partners on YouTube, and then Mike does daily analysis on there, and you'll see these patterns. Him and I took years of data and looked at these patterns in order to create higher probability ways to trade them. So you'll see that we're very strict about the way that we look at these particular patterns. You might see somebody on Bloomberg or one of these other financial channels say, there's a head and shoulders here. And Mike and I will go, no, there's not, right? Because they're just viewing it and saying, wow, there's three tops. And they don't know what they're talking about. And they don't have the rules engaged into it.
Is it something like you explain about the trend lines?
Yeah.
Because what you use is like kind of best fit trend line.
Yeah, it's very much that. I mean, again, you'll have people who have never really studied price action say, oh, I know this is a head and shoulders, so we got to look for a break, but they don't know any of the rules of it. And by the way, your target on head and shoulders is a measured move, which we covered yesterday, and they don't know that easier. The Basque, we've got Basque County. Oh, yeah. Basque Country, I'm sorry. That's nice to see. Houston, Texas, Toronto, Kuala Lumpur. Janine's somewhere in the USA, which is a very big country. Ben, I knew you were from Ontario. That I knew already. And Leo's in California. Nice.
Okay, cool. Are you going to share this screen? Okay, you can put that in.
I'm going to share my screen here, and I'm going to show you guys
how we can identify head and shoulders.
Yeah.
Thanks a million.
I'm going to share my entire screen. So I know you guys like smaller cap stocks, and this is a smallish cap stock. It's C3AI Incorporated. I'm going to put this chart full screen. You're seeing the chart full screen now, right?
Correct. Yes.
All right. I'm going to delete this line because I was playing around with it. So head and shoulders are reversal patterns. That's why they're called head and shoulders tops and head and shoulders bottoms, or inverse head and shoulders, right? So here I'm showing you that the symbol for this stock is AI, okay? It had a head and shoulders top right here. Okay, so what you got is a left shoulder, a right shoulder, I'm sorry, a head, and then a right shoulder. Now on these particular reversal patterns, I prefer my right shoulder to be lower than my left shoulder. In other words, I'd rather see this up here in terms of its high and this high down here. But those are rare, to be honest. So one of the main characteristics of a head and shoulders is the neckline, right? And the neckline is the trigger for you to trade it. So I'm going to draw the neckline. Now, normally in this kind of a chart, I would draw a trend line here, okay? But because I have a head and shoulders, can you guys see this, or you need me to thicken it up, Buddish?
It is visible.
It is visible. Okay. But with a head and shoulders, you're not drawing a trend line, you're drawing a neckline. And a neckline is different than a trend line. It gives you an earlier entry. Okay. So I'm going to go ahead and delete this. Well, I hit it twice. And I'm going to draw the neckline. And you draw the neckline from the inside of the left shoulder. So from the low here, not from over here, but from here to the inside or the beginning of the right shoulder. Okay. So right there to right there. That's your neckline. All right. So we've got a shoulder, we've got a head, and then you've got a neckline, which forms the neck. The next thing you're going to do is watch for where the neckline is broken. Okay. You can see the blow breaks it here. Now this is a daily chart. On a daily chart, I prefer to wait for a close, but we're going to go ahead and play off of this and you'll see why in a minute. I said it's a measured move. Okay. So in order to get the measured move, you measure the high of the head, okay, which in this particular case, I believe the high is 33.11, okay? And you're going to go straight down to an approximate level of the neckline, okay, which is about here. So it's about 25.16 or so, okay, somewhere right about on the ear, all right? And then you subtract the difference between the two. So 33.11 minus 25.16 is $7.95. Okay. Remember that $7.95.
Mm-hmm.
Then you follow the trade. Okay. The neckline holds, it holds, rising a little bit here. We break the neckline right here. So from this particular point, okay, which is about 29.23, right? You're going to subtract that 7.95 that we discovered was the distance between the head and the neckline. Did I get that right? Is that 29.23? Yeah. It's approximate. So we go 29.23 minus 7.95, and you get 21.28. That's your target. So I'm going to put this line at approximately 21.28. Just going to be approximate. Okay, I don't need to get it exact. And that's just because I'm showing you guys. You guys want to get it exact. Okay. So 29.28, right about there. Okay. You guys can see this white horizontal line, right?
Correct. Yes.
All right. And you want to go short when it breaks the neckline. Now, again, on a daily chart, I prefer to wait for a close. So I would have gone short just because it's more reliable. You get a lot of head fakes on Head and Shoulders as well as you do on doubles. So I would have gone short about 28.34. But if you wanted to go short on the low here, you would have gone about 29.16. Just understand that it's lower probability, but you have a better entry. All right. So I always talk about risk, right? Where's my stop? Well, you have two potential stops here. Okay. You have a close above the fail-safe trend line. What's the fail-safe trend line? You draw a downward sloping trend line from the head to the top of that shoulder. Okay. Okay. You get a close above this, you're out. All right. Then we also have what we call a blowout stop level. That's the stop you're going to place in the market. All right. And that's going to be above this high. Okay. Above the high of the right shoulder. If we get a blowout above the high of the right shoulder, you want to get stopped out because there no longer exists a Head and Shoulders anymore. Once you get a move above there. Once we've got a break of the neckline, as long as we stay below this fail-safe trend line, the Head and Shoulders is still intact. But if we get above the peak of the right shoulder, there's no Head and Shoulders pattern anymore. It's blown out. So you want to get stopped out. So I'm just going to put another horizontal line up here. Okay. Now, what do I do? Where do I put it? Well, I look for other areas of resistance, right? So you notice that this line matches up with this high right here. You can see my cursor, right, Badish?
Correct. Yes.
Right, so I don't want to put it right there. Mm-hmm. So I think for me, I'm going to put it somewhere above this particular candle right here. Why? Well, because there's a little bit of a gap between these two. So that makes the high of this candle significant. So my blowout stop's going to be around 32.32. My actual stop, every day I'm going to look at where this trend line is, and I'm going to wait for a close above there. Closes above the fail-safe trend line, I'm going to get out. All right. Well, why do we do all this? Because we've back tested it and it proves to be very reliable. That's why we do it. So now my trade is all set up. Some of you who are more aggressive would have gotten short at this low of about 29.16. I would have waited till here. Now, why do I say you can do that here? Because your stop is closer if you get the better price. Okay, but the probability of the trade working is better if you wait for the close. So it's lower risk if you enter when it breaks. It's higher probability if you enter when it closes. And you could visually see if I put this line here as my entry, or put this line here as my entry. Either way, the reward to risk is in our favor, right? You can just see with your own eyes that the space between this entry and the fail-safe stop up here, or the blowout stop up here, and the distance between this entry and the blowout stop up here is smaller than the distance down to my target.
Yeah.
Okay, now the last thing I want you guys to look at before you enter the trade is the target within the move that the pattern is reversing. In other words, this up move that we're reversing started all the way down here. My measured move is inside that rally. Right? If my measured move would have been down here, I'll put another line just to make it clear. If my measured move target would have been down here, I wouldn't take the trade because this is too strong of a support and the measured move reacts to where the move started. Now, some people would say, well, why didn't you put your target down here? That's not the way the pattern works. Okay, so that's why I wouldn't do it. But luckily, our measured move is within the move it's reversing. Now I go forward in time and look where the down move stops. Right in the area of the measured move. Right now, had I done it from the break here, okay, had I done that 795 from the break here, would have been almost the same area, right? So remember, I'm not measuring the move from the close here. I'm measuring it from where the neckline was broken, not where I got in the trade. Okay. So you notice the market goes all the way to that spot. That's why you have to have your plan for your target, right? Your target either means, again, I've said this before in these sessions, a target is a place where an action is required, not optional. It's required. You have to effing do something at your target. Okay. Especially if it's a measured move target, because you found that target long before you entered the trade. So that target matters. And the only time you're thinking clearly about a trade is before you're in it. So a lot of people, when they see this gap, they go, oh, I'm almost at my target. Great. And then that day closes. Then the next day, remember this green area right here, that's the open. The bottom of this candle is the open. And you're sitting there like, oh my God, I'm going to make a fortune on this trade. So you take your trade out, your exit out. Or you don't reduce your stop because you don't want to get stopped out, right? You don't tighten up your trailing stop, whatever it is. That's stupid because look what happened here. It rallied back up and it started to rally here. Now we can go forward in the future and this is what happens. So far, you have not reached the target area again. And here's where you start getting mad at yourself. You're like, wow, I could have gone out of this thing at 21.28. We're still at $23 on this particular stock. Right?
Would you cover your position at that point entirely, or just some part of it?
Personally, what I do, and it's just a history of me doing it from the trading floor, is I cover 75% of my position here, and then I tighten the stop up. Okay, and it's trailing stop, and I have several ways of doing that. Okay, a lot of the times I put the trailing stop below the defining point of the neckline. Okay, so once this is reached, my trailing stop, it's going to be somewhere around here. All right. And I probably got stopped out here with my trailing stop. Okay, because I would have been below this point. And you can see up here, if I just put the cursor there, it would have been close. It would have been very close. Right. Now, maybe I would have looked at it and said, well, the 50 is here. Let me put it above the 50. I don't know because I didn't take this trade. What I did today, because you guys like smaller cap stocks, is I went to one of the sites that I subscribe to, and I looked at earnings over the last week for the Russell 2000. And I tried to find a head and shoulders in that batch of stocks. All right.
That's a good point. Yeah. Okay.
That's what I tried to do to find a lower price stock to talk about for you guys. But this is a perfect head and shoulders.
Right.
And it played out exactly as a lot of them do. Right. So again, the components are left shoulder, head, right shoulder. Mm-hmm. Neckline is the key. That's your trade trigger. Fail safe trend line, blowout stop. Those are the things you have to have in place. And then once you get a break, you could put your measured move target. And I keep bringing that up because, you know, what if it broke here? It didn't get above the blowout. It didn't get above the fail safe. What if it just slowly went like this and then broke here? Well, your measured move target is now $29.99, right? Mm-hmm. Minus, what was it? $7.95, which was the distance between the peak and the headline. Now your target's 22.04 instead of 21.28. Remember, you're still going to make approximately $7.95 or less on the trade, and your stop's going to be tighter here. So if you remember the percentage trading, you'd probably have a bigger position here because your stop would be tighter. So that means if you're trading percentages, I know Ben is, I don't know if anybody else is yet, but if you're trading percentages, you'd have a larger position if you entered here. So the amount of money you'd make if you made the full $7.95 is the same because the position grows, even though the stop is tighter. So actually, I'm sorry, you'd make more there. So, but it's not important.
Yeah.
This is the characteristics. It's a reversal pattern. Now I have something else to show you guys on this particular stock.
Also, sorry to interrupt. Janine asking privately, how far out is your daily chart? This one.
How far out is my daily chart?
Yeah, that was the question.
I don't know what that means. It's a daily chart. What do you mean? How far out is it?
Yeah, can you clarify that, please, Janine?
I'm sorry, man. I'm not sure what that means. Okay. People ask me if this is a head and shoulders bottom, and it's not. It's a double bottom. Okay, there is a shoulder here, there is a head here, and there is a shoulder, but when you draw a fail-safe trend line, it's almost flat, right? From here to here. It's basically a horizontal line. So that's one of the ways you test if that's a head and shoulders or not. It's not, okay? Is this a head and shoulders? Shoulder, head, shoulder. No. Anybody guess why? I can't see you guys, so I'll just tell you. The left shoulder is lower than the head. Look at me. Is my left shoulder higher than my head right now? No. So it's not a head and shoulders. And by the way, this would have been an inverse. So
I was actually going to ask if you have any example for the inverse.
Yeah, this one was close, but this shoulder needed to be a little bit, this low needed to be a little bit higher. I didn't see any more in here. Here's another double bottom though. This one stopped out, didn't work. I'm just gonna keep looking at this chart since I have this chart up here. Yeah, I don't see any, to be honest.
Janine says about the question, 5-minute chart or 1-minute chart.
This is a daily chart.
Yeah. Okay.
So what I would say to that off the top of my head, and I'm not trying to be disrespectful here, I'm not finding anything, but just I'm cutting myself off here. They work the exact same way, just in the opposite. Okay, so a head and shoulders or an inverse head and shoulders, the neckline is going to be angled down, the fail-safe is going to be angled up. You're going to measure a rally as opposed to a sell-off. They work the exact same way. They're just flipped. They're just inverse. So it's pretty simple. If I can find one for next week, okay. Yeah, I'll just show it to you really, really quickly before we cover the new subject.
Okay.
Well, what I was going to say, I'm going to stop sharing this for a minute, unless you guys want to take a screenshot. What I was going to say was, if you're not sure what I mean by a daily chart, slow your trading down and learn a little bit more. I'm not trying to be disrespectful. Okay. A 5-minute chart is a 5-minute chart. A 60-minute chart is a 60-minute chart. And a daily chart is a daily chart. So what does that mean? Each one of these candles represents a full day of price action. Okay. If I switch to a 30-minute chart, each one of these candles represents 30 minutes of price action. Okay. You have to be solid in that. If I switch it to a 1-hour chart, each one of these represents 1 hour of price action. Okay. So what that's when a professional references a chart and he or she says it's a daily chart, it means each one of these candles is 1 full day of price action. Hopefully that makes sense.
Yeah, thanks for that. Wow. Ben says, are the MPOX stocks looking good for continuation into next week? Looking strong today to me.
MPOX? What do you mean by MPOX?
The monkeypox, the new disease kind of.
I don't look at MPOX, so I'm not even sure what we're talking about when we talk about MPOX.
I think APDN. I'm not sure about if you can give us the tickers, maybe we can review them. But
yeah, I'll look at anything you guys want, but if it's something I haven't used in 30 years, I can't give it to you off the cuff. But I'm happy to look at stuff.
Yeah, biotech stocks related. Last week or 2 weeks ago, World Health Organization.
You're talking about the monkeypox stocks?
Yeah, APDN. There we go.
I would just look at a chart.
But then, like 2 weeks ago, there was a catalyst, like announcement by World Health Organization. They alert red on the monkeypox disease. So since that day, the stock prices were going up.
Okay, I'm going to look at all 3 of those symbols you just put in, Ben. But to answer Janine, okay, I know what a daily chart is. When I ask how far back do you go? 2-year, 5-year? I would answer this like this, Janine. I just showed you a head and shoulders pattern that encompassed about 3 weeks of data. But the chart itself goes as far back as the data is fed by the TradeZero, God, I forgot the name already, the Zero Pro platform. But none of that back data matters for the pattern I'm showing you, right? So I'll look as far back as data as I need the data, right? So for example, if I'm looking for a long-term trend line, I'll start at the oldest point the data is provided, and I'll draw the trend line. Then I'll draw the next one. Then I'll draw the next one. Then when the trend line is broken, I'll redraw it. And I'll just go back as far as I need it to go. Once a an upward sloping trend line is flat, it's no longer a trend line, I'll delete it. And then I'll start with the upward sloping trend lines. So for the particular pattern I just showed you, all I needed my daily chart was to go back with about a month, right? I didn't need much more than that.